Good morning, everyone. Welcome to the market opening bell for Thursday, November 27, your 10-minute guide to the stock market. U.S. Treasury Secretary Scott Bessent said that in 2025, President Trump and President Xi Jinping could hold as many as 4 meetings. While the two countries will always remain competitors, he believes cooperation is still possible. Trump is expected to visit Beijing in April and may also attend the APEC summit in Shenzhen in November. In return, President Xi is scheduled to make a state visit to the United States and participate in the G20 summit hosted there. Bessent added that China is making good progress on increasing soybean purchases from the US, committing to buy at least 87.5 million tons over the next 3.5 years. Markets continue to price in a Federal Reserve rate cut next month. The Dow posted its third straight gain overnight, giving Hong Kong stocks a positive lead. The Hang Seng Index opened 152 points higher and climbed as much as 241 points to an intraday high of 26,136. The rally faded in the afternoon, with the gain narrowing to just 12 points at one stage and the index dipping to 25,907. In the end, it closed up 33 points, or 0.1%, at 25,928. The A-share index added 4 points to 9,162, while the Hang Seng Tech index edged 6 points higher, also 0.1%, to finish at 5,618. Total market turnover was HK dollar 207 billion. Southbound funds recorded a net outflow of HK dollar 3.952 billion from Hong Kong stocks yesterday. Notable buying was seen in Alibaba W net HK dollar 1.528 billion and Yangtze Optical Fiber, while heavy selling hit the tracker fund HK dollar 2.259 billion, Tencent HK dollar 1.18 billion, and Meituan W. Southbound money has now bought Alibaba on 10 consecutive days, totaling HK dollar 24.531 billion, and sold SMIC for 5 straight sessions, totaling HK dollar 1.66 billion. Technically, the Hang Seng remains capped by its 20-day moving average, around 26,180, and closed below the psychologically important 26,000 level again. Momentum looks weak, turnover was modest at HK dollar 207 billion, and the 9-day RSI sits at only 47. The key level to watch now is whether the index can hold above its 100-day moving average at 25,693. Over on the mainland, the 3 major Asia indices opened lower but recovered through the morning and then moved mixed in the afternoon. The Shanghai Composite closed down 5 points, or 0.2%, at 3,864. The Shenzhen Component Index rose 130 points, or 1%, to 12,907, and the Chinex Index jumped 63 points, or 2.1%, to 3,044. Combined turnover in Shanghai and Shenzhen reached RMB 1.781 trillion. The RMB central parity rate against the dollar was set 30 pips stronger at 7.0796. Among individual Hong Kong stocks, Alibaba 09988 fell 1.9% to HK dollar 154.8 after management guided for slower e-commerce customer management revenue growth. NIO dropped 6.2% as its quarterly loss narrowed, but guidance disappointed some analysts. Chow Tai Fook plunged 6.1%, the worst blue chip performer after both revenue and profit missed expectations. China Vanke slid 6.3% amid ongoing bond market turmoil. Several of its bonds fell more than 20% again yesterday, triggering trading halts, with HK dollar 5.7 billion of medium-term notes due next month. Meituan, which reports quarterly results this Friday, was the best performing blue chip with a 5.6% gain. Analysts expect slower overall revenue growth in the third quarter because of fierce competition in food delivery, with order growth around 10% and the segment contributing roughly half of revenue. Management has warned of relatively large losses in the quarter, but stressed it will defend its roughly 70% market share. In-store, hotel and travel revenue is seen rising 15–20%, helped by the National Day holiday rebound and expansion into lower-tier cities. New businesses such as Meituan Select and Kita are forecast to grow revenue more than 25%, with losses narrowing 50–80% year-on-year, and the segment may even turn slightly profitable this quarter. Overseas expansion, including Kita's launch in Saudi Arabia, remains in heavy investment mode but carries strong long-term potential. Li Auto reported a swing to loss for the third quarter ended September, posting a net loss attributable to shareholders of RMB 625 million versus a profit of RMB 2.814 billion a year earlier. Revenue fell 36.2% to RMB 27.36 billion, and vehicle deliveries dropped 39% to 93,211 units. The company guided for another tough fourth quarter, with deliveries expected between 100,000 and 110,000 vehicles, and revenue between RMB 26.5 billion and RMB 29.2 billion, both still down sharply year-on-year. Alibaba Health reported solid interim results, with revenue up 17% to RMB 16.697 billion and net profit jumping 64.7% to RMB 1.267 billion, helped by operational efficiency gains and improved pricing power. In the US, the probability of a 25 basis point Fed rate cut next month rose to 85%, according to CME FedWatch. Wall Street extended its winning streak to 4 sessions ahead of the Thanksgiving holiday. The VIX fear gauge dropped 7.4% to 17.2. The Dow rose 314 points, or 0.7% to 47,427. The S&P 500 added 0.7% to 6,812, and the Nasdaq gained 0.8% to 23,214. AI-related names led the advance, with Oracle up around 4%, Nvidia up 1.4%, and Broadcom and AMD both rising more than 3%. The Federal Reserve's latest Beige Book showed U.S. economic activity little change recently, consumer spending softening further, especially among lower and middle-income households, and employment edging lower, mostly through hiring freezes rather than mass layoffs. Tariffs continue to worry businesses, pushing up input costs and squeezing margins in manufacturing and retail. U.S. markets are closed today for Thanksgiving and will close early at 1 p.m. Eastern Time tomorrow. Our stock pick today is Lopal Tech, stock code 2465. As one of the world's leading suppliers of lithium iron phosphate (LFP) cathode materials, Lopal Tech has been aggressively expanding in the new energy battery sector in recent years, signing multiple major long-term sales contracts focused on securing stable long-term supply of LFP cathode materials. These contracts have not only solidified the company's position in the power battery and energy storage markets, but also driven significant breakthroughs in overseas markets, building on the 260,000-ton long-term supply agreement previously signed with LG Energy Solution. Lopal further entered into additional long-term supply agreements in January and June 2025 with Blue Oval Battery Park in Michigan and Eve Energy Malaysia, respectively. These agreements further lock in overseas LFP cathode material sales volume from 2026 to 2030. In China, in May 2025, Lopal's controlling subsidiaries Changzhou Liyuan and Nanjing Liyuan signed an LFP cathode materials sales contract with subsidiaries of Connex New Energy. Under the agreement, the sellers will supply a total of 150,000 tons of LFP cathode material to the buyer from 2025 to 2030, with monthly pricing to be determined according to the contract terms. Based on current estimated volumes and market prices, the total contract values is expected to exceed 5 billion yuan. In November 2025, both parties signed Supplementary Agreement 2, increasing the total committed volume to 1.3 million tons of LFP cathode material from 2025 to 2030, based on estimated volumes and current market prices. The combined value of the original contract and supplementary agreement 2 is expected to exceed 45 billion yuan. This provides strong positive support for the group's future performance and is expected to help the company turn from loss to profit. The accelerated construction and progressive ramp-up of multiple production bases have formed a diversified and resilient supply system, enabling stable product delivery to customers, advancing the group's vertical integration strategy, and further enhancing large-scale production capacity. Notably, the Phase 1 30,000 tons LFP cathode material project in Indonesia has begun mass production in 2025, with product quality recognized by customers and stable supply to target markets already achieved. Construction of Phase 2 in Indonesia is actively underway, marking a further significant expansion of the group's overseas LFP cathode production capacity. Investment suggestion buy at 14.8 Hong Kong dollars, target price 16.50, stop loss $14. I do not hold any position in the above stock.